Hello, Dr. L here. This is a video from the Chaos Clinic at daytradingforecast.com for January 5th, 2018. This is a market update. Okay, it's time to get started. If you have any questions, you can type them in the chat box on your TeamViewer thing. If you don't have the chat box open at the top of the TeamViewer window, there's a camera, some earphones, and a third symbol which is marked chat. If you click on it, you get a box down below that you can type questions in. Okay, this is a overview of the market in December 13th, I think it was. Larry Pesavento asked me to be on his radio show, and in preparation for that, I created this chart. This is a long-term chart of the S&P and my StarGo function, which is presented in gory detail in my StarGo course. What this chart shows is the bull market from 94 into 2000. This was the one that at the end of 2000 everyone thought the world was going to come apart because of Y2K. Well, it didn't come apart, but later on that year the market turned down and had significant drop down here in 2003, rallied back up in a 5-year bull market, and then it had a sharp drop in the 2000 and starting in 7, 8, and 9, and everyone calls that the Great Recession. Since then, pretty much following StarGo. StarGo is a pretty crude forecast. It only has data points every couple months, so it's not an exact fit. But the market's been going up and up and up and up and up and up. Now, one thing I do is that I scale prices to the ephemeris wheel, and you have to pick a scaling. Scaling for 1 year is 360, which comes from 360 5.25 days in a year. So that 360 is the nearest harmonic number. This, from top of the last bull market to about now, is about 10 years. So based on that, I did an analysis using a scaling of 3600. Now these horizontal lines are lines that I call vibration levels. These are major areas of support and resistance. Because of fractal geometry, they won't be precise. But if you see this yellow one here, a little goodbye kiss right here, 96, we ran up for a couple of years, vibrating around the yellow one here, came down to this purple one. And this purple one was violated and didn't make it down to the yellow, back up above the purple, back up to yellow, punched through the yellow up to the purple, came back down on the purple. Now, in 2014 and 2016, we tested that purple level. From this lower purple level up to that purple level is 90 degrees. Now on this scaling, 90 degrees comes up here to this purple level, 2730. Now when I made this in December, I wasn't sure how good that might be. But lo and behold, here we are this morning up here at 2730. Now this is a daily bar chart starting at starting at January 2017, and I've marked harmonic price levels. Dropped the 0 that's off of it. That's 225, 240, 255, and 270. Now, what I point out on this chart, these are exponential moving averages. I like to use a rainbow of moving averages to help me track the speed of a move. Because what happens near the end of a move is that the market moves faster and faster and faster until finally it can't move up any faster. So if you look at this, we came up early last year, peaked up here right near the end of February, pulled back down here. The natal birth date of the S&P is on the 21st here, 4/21. Right near that, we started up here. And notice we were tracking the 110-day exponential moving average and started forming a channel here, shown by green, connecting this low, those lows, this low. The top of the channel, parallel, projecting that up in here. It's obvious in December that we were getting near the top of the channel and that we're going steeper and steeper. Right now, we have gotten above the 6-day exponential moving average. So we are getting, the move is getting steeper and steeper. This looks to me like a blow-off move. That's what I said in December, and I haven't really changed my view on that. However, blow-off moves can be quite profitable. This is my intraday plasma chart for the last trading day of 2017 and the 4 trading days of this month. Last trading day, market rallied up. And what I'm showing on this chart is one of my tools. These are heliocentric electric field flux lines. We ran up to this magenta one on Friday and started down and broke down here, hesitating on these two, then had this late drop, and I made another YouTube video about that. This was holiday low volume, late drop. Significantly, I saw that it ended on this Mars flux line. So I was not surprised that when the market started trading on the 2nd that it had popped up. And it traded sort of sideways, but significantly right here at the very start right in here was the full moon, full supermoon. And that started providing energy to go up. As we came up here, we came back and tested this. It's a Neptune-Uranus pair right here. Then we started moving up, barely made it up to 2694, the close on the 2nd. On the 3rd, trading was dull. We were sitting on this Chiron 180 line, and then popped up. At that point, I began seeing a pattern and a channel. There's a 1 and a 2, and these are channel lines going up. And there's 3, 4. Yesterday morning in the chat room on daytradingforecast.com, when we were right in here, I told people that it looked like move 5 was about to begin, and indeed then it did run up, and it stopped by this Neptune one, slow rise overnight. So this is some kind of a 6. The market is now going up. Right now it's up about this level here, but somewhere in here is a move 7. We probably could be going higher, but if I look at these flux lines coming down next week, we have this node line coming down, and it's node and Saturn are going to be conjoining in there. So if we get up in here, it could be on a short-term basis some kind of a completed 1, 2, 3, 4, 5, 6, 7. I'm waiting to the end of the day to see what I do about my position. I am long. So when I look at the S&P, it's great that it's been going up. I am concerned that we may be seeing the blow-off that signals the end of a bull market. Now, one of the things that happens at the end of a bull market is that the laggards start moving. And there's no better laggard in the world than Twitter. This is a daily chart from Twitter's IPO for 1, 2, 3, just about 4 years. This day right here on my stock board, I noticed Twitter's up 8%. What? Twitter's up 8%? Well, it's a pretty low number. So I did an analysis using my XGO. I filter it with to find long-term cycles, and this is a long-term cycle driven mostly by Jupiter. So this is that filtered energy forecast. And of course the forecast isn't worth a damn if it's not working. And the way I tell if it's working is I run an exponential moving average. This one turns out to be an exponential moving average of 576 days. So this was a chart of Twitter that I presented February 13th on Larry Pesaveno's radio show. These horizontal lines are again vibration numbers. So I can show you that it's been working. This exponential moving average has turned up. Twitter has moved up a little bit. So this laggard, at least for now, is moving. It's getting mentioned every day. It's probably mentioned more than any other stock in the world because everyone's talking about Donald Trump's latest tweet. So it's Twitter, Twitter, Twitter. So this laggard's starting to move. Now, another thing that has been in the news lately, it's been in newsletters, it's been on the radio. My wife even used the term Bitcoin, Bitcoin, Bitcoin. So I want to take a little bit of time and explain to you what Bitcoin is. I first heard about Bitcoin from my then son-in-law, who was going to make money by running his computer and creating Bitcoin ledger transactions for which he would get paid in Bitcoins. Bitcoin is not a currency. Bitcoin is simply, think of it as a spreadsheet that's keeping track of your checkbook. Well, you can go on your computer and you can add a line to add a check, right? A transaction. You could call that spreadsheet your ledger. Now, the gentleman who invented Bitcoin, who invented it, published it, but has maintained his or her or their secrecy, they creating a new piece of technology called blockchains. Blockchains are a significant bit of technology in that this sort of creates a spreadsheet that anyone in the world can update. And there are special rules on how you can update it, how much you get paid, etc. Very clever. It's all published on the web, and people could download the Bitcoin program, and they could become what are called miners. To add a Bitcoin transaction, the operator of that program has to crack the code of the last transaction. It is a code cracking hacking job. So this product was created by a secret group of hackers. So Bitcoin has grown since its invention in 2009 very slowly until recently. A group, if you track down where the miners operate, most of them were in China. But to me, this is the ultimate mania. It's in the news. The news was, wow, we're going to pay for our wedding. I was getting emails. This guy invested $100 in Bitcoin and it's now worth $1 million. Hey guys, there is no free lunch. This is a sign of a mania. If you look at this in technical analysis is called a power curve. Bitcoin is not backed by anything. Stock is backed by the earnings of the company. Futures, like grains, are backed by physical product. Currencies, real currencies, Bitcoin is not a currency. It is a computer file that any miner can change if he can crack the code. No one knows who is behind Bitcoin. Would you buy a car with a warranty from a secret organization? I wouldn't. So there's a technical analyst many years ago called Joe Granville. And when he identified power curves, he reminded people that there is no nice way to come off the backside of a curve. Not only has Bitcoin been in the news, but in December we started futures trading in it. So, oh, and by the way, this is a crude long-term forecast, a ZGO for Bitcoin. Since its creation, it was fairly flat, has this big hump up. So when I ran this is a crude forecast. It does not show the power curve, but it shows energy peaking in a couple months here. So after I gave the presentation in December, this is what happened to the Bitcoin. Oh, it made the news. The first week it traded on the Chicago Mercantile Exchange, prices dropped 40%. Now they're kind of chopping around. So I really caution people against this mania. This is the tulip mania of 2017 and 18. So find something better to trade, something that's real, not something made up by hackers. So my message is, beware of Bitcoin. Caveat emptor. Okay, so if the market's going to top out and the speculative things are going, there are some stocks that are going to run counter market. So be careful of those. A lot of people are in mutual funds through their retirement accounts, their 401ks or IRAs. Most of those had like a 25% profit last year. So I've had discussions with several younger people, technical people still in the workforce, and they just don't expect another year of 25%. So they're looking to protect their assets. Well, one asset that I've watched for years, this is the ultimate haven for quote safety. This is the GLD Exchange Traded Fund for Gold. And it has run up. It peaked up here. Notice the nice harmonic numbers. 180, half of a circle. Start down here at 45. That's one reason I like this. Peak up here at 90, etc. Now it pulled back here to 105. Then it made a double bottom. It looked like it's running up here, but look at this converging triangle. Now here's a smaller converging triangle it's worked up into, and it's started. This is the 2-year exponential moving average. Right here where it dropped below it, if you were holding gold, you should have gotten out. Came up here. If you bought gold, you had to put a stop down under here. You have to use wide stops for long-term trading. Came up here. Last year, it started running up, and then in one 8-hour period, boom, it got hammered. So someone wasn't done selling gold, drove it back down here. But this is a converging triangle. This apex, which is coming up soon, is suggesting, it's only a suggestion, this is a technical analysis. I'm not making any recommendations on what you might do, but you might want to look at gold. This is the GLD Exchange Traded Fund, and this is gold futures. This is just the clothesline and some exponential moving averages. Again, I like rainbows. This is a 22-day, 44-day, and 88-day. Those all come from the planet Mercury as a 88-day cycle. So now what I notice on this is we've got kind of a 1, 2, 3, 4, and if you've looked at chaos clamshells, you know that move 5 can be pretty good. So that's my current view on what the market's doing and what might be going on that might be of help to you. Of course, I'd like you to come to moneytide.com, look at my specials, and take some of my courses. So that's all for now. Thank you very much.